courier company DHL believes that trade between the United States of America and Sub-Saharan Africa is set for continued growth as both regions build the recent US presidential policy directive to achieve sustainable development through increased trade and investment. For more now, I'm joined on the line by Charles Brewer, the Managing Director for DHL Express Sub-Saharan Africa. Charles, thank you so much for making the time to join us. So if we look at the PPD, where are we likely to see increased volumes of trade between the USA and Sub-Saharan Africa? Any countries that you think are going to be the first ones off the block?
Well, I think you're seeing trade across Africa growing very quickly, I mean, to all regions. What's interesting in terms of today and probably for tomorrow is that the dependency on Europe, which historically has been a major trade lane, is somewhat diminishing, somewhat reducing. And, of course, Asia is growing very, very rapidly. But behind that, you have an increasing trade flow between Africa and the US. And, in fact, if you look over the last sort of 10 years, it's grown 250% and now represents around about $72 billion. And coming from countries such as South Africa, Nigeria, Ethiopia, Kenya, Ghana, and Angola. And what's equally interesting is that lots of smaller countries getting in on the bandwagon. So Somalia, Mayotte, Guinea-Bissau, South Sudan, Comoros, Eritrea, and Liberia. So big ones, yes, but lots of small ones coming up behind.
Let's look at the smaller ones that perhaps don't always get the attention that the big players get. What's differentiating these smaller countries to the extent that they are being seen as very attractive to the US for exports?
Well, let me give you a real-life example. Take Ethiopia as an example in terms of trade. So historically, a very difficult place to do trade, historically fairly insular in terms of how it's operated. A real-life example, 2 months ago, on one of my visits, in the bus from the airport, going to the hotel, 5 other Westerners in the bus, and which is unusual in itself. And I asked, so what are you doing here? And all 4 were from textile houses in America. All 4 were visiting Ethiopia, looking to buy denim from Ethiopia. So, as a simple example, Ethiopia is obviously it's got a variety of different sort of industries and drivers of its GDP, its economy. But what's very interesting is America's looking at other locations to buy its textiles from, other than sort of very traditional Asian economies they have done over the years. So a great example of just one country and what it's doing to trade with America.
Of course, to a large extent, the US has come under fire for somewhat lagging behind the Asian interest in Africa and also Europe's interest in Africa. What can we expect from the US in terms of doing business differently with the African continent?
Well, I'm not a US economist, and I don't sit in the US government, but to give you real-life examples, and on my recent visit to the US, met up with a number of tech companies, and of course, like all other industries, most markets are talking increasingly about Africa. And I think what we'll see over the next few years, as I've already mentioned, shift in trade flows, certainly with more trade going to Asia, more trade going to the US. But I think interestingly, today, if you look at how product comes into Africa, most of it is imported from the Middle East and or indeed from Asia Pacific. Very little is produced or manufactured on the continent. And I think we're going to see that change. We're going to see as markets become easier to do business, as the disposable income increases, as the 1 billion population start to spend more than they already are on consumables, we'll see those tech companies and others come to Africa, locate in Africa, and start distributing in shorter zones.
Of course, I'm sure a lot of the business that you do, Charles, and oversee is dependent on the availability of infrastructure to see those goods moving out of the continent and into the continent. From where you sit, what would you recommend as perhaps the biggest policy drivers that could see the infrastructure backlog being addressed on the continent at a faster pace?
Yeah, it's the biggest challenge. The thing that probably keeps me awake the most at night in terms of how to do business in Africa, and in fact the World Bank report that came out fairly recently did show great improvement. Africa making huge strides in terms of how easy it is to do business in the continent, but still lags obviously the more established markets. So we still have a long way to go. And the biggest drivers of the difficulty or the challenge mainly revolve around the border environment. How easy is it to bring something in, or how easy is it to take something out? And in those particular areas, we still have a long way to go.
Of course, we also have other policies and agreements such as AGOA. Do you perhaps know, Charles, if there are any definitive targets that have been set in terms of increasing trade volumes between the two entities?
As far as I'm aware, there's no set numbers, but again, history is a good sort of barometer of the future. And as I mentioned earlier on, just the US in itself is growing at about 250%, so growing very rapidly. If you look at the shift and growth and trade lane between here and Asia Pacific, which is growing something like 70%, we can expect accelerated growth in those two trade lanes.
Are the patterns of trade shifting or changing anyway? And I'm thinking more now along the lines of beneficiation and value-added products coming from Africa into the US, or are we just looking at an increase in volume and not necessarily an improvement on the value front?
I think you'll see it probably in both, actually. And again, DHL's recently conducted quite a bit of work around how trade flows and trade lanes will change over the next sort of 5, 10, 15, 20 years. I mean, again, in our business, we do a lot of forecasting around where we think volumes, both in terms of type of product, weights and commodities, will sit and where they'll move from and to, mainly around sort of planning for additional capacity and so forth. So, again, no one can be 100% clear about this. It's very difficult to predict. But it is highly likely, if you just look at the population in Africa, what's happening with, I mean, all the statistics point towards that growth, those growth levers, those growth engine, Africa being a growth engine. And so we know that the trade is going to polarize more towards Africa, more between Africa and Asia Pacific, more between Africa and Latin America, more between Africa and the US. So those sort of forecasts are pretty well understood, and most would agree that's very likely to occur. In terms of what type of products, that one's a bit more difficult. And in the very short term, I think it's fairly unlikely you'll have significant manufacturing locations across Africa. I think it will still be an import destination primarily. But one of the very fast-growing segments, and definitely an area we believe is going to be an engine of growth for Africa over the next sort of 0 to 5 years, is the SME segment. So there are hundreds of thousands of SMEs across Africa. And as we all know, it's an incredibly entrepreneurial continent. If we can connect those SMEs with the rest of the world, that will spur huge economic growth.
And how would your biggest piece of advice be in terms of connecting those SMEs to the global markets?
Just do it, as a famous sports brand says.
Just do it. Thank you so much, Charles, for joining us on the line. Of course, that was Charles Brewer, Managing Director for DHL Express Sub-Saharan.